Let's get down to business with Nona Peltier, who's joined me in the studio. Nona, real estate figures. People in Auckland in particular love these figures, don't they? But maybe not these ones. The Real Estate Institute, latest Auckland house price data. What are they telling us?
It's quite mixed. And let's just talk about the pricey suburbs, because I think that's what people really want to gawk at, aren't they? So let's say Takapuna, for example. Their house prices have risen substantially, like a third, really 30% increase. That's a $300,000 average price increase. So they went from 1 million 6 months ago to 1.3 million to the 6 months ended March. 6 months. Yeah, that's the average price. Now, you might think, well, that's quite a lot. But now imagine if you lived in Herne Bay, which is considered one of the priciest neighborhoods in all of New Zealand. And its average price went from 2.1 million to just over 1.7 million. So that's a drop of $300,000. These are major, these are massive numbers, aren't they?
This is a whole house in some areas of New Zealand.
It's an average price only. That means that there's some more that are, more or less, right? And that was only a 17% drop. So there has been some significant drops. When you look at the actual base number, though, those are big numbers, 300,000 here or there. I suppose if you can afford a house like that, maybe it doesn't matter. I'm sure it probably does, though.
Yeah, I think
$300,000. It's a lot of money.
There'll be people squealing about that.
Yes.
And have they given any reasons for that sort of the rates?
Just these swings. Now, we've seen this happen that, people who are trying to sell will sell because they want to sell. But there's been a lot of information in the more national numbers that we get that people are simply not selling their homes. They're hanging on to them because they can't get the price they want. But if you have to sell, if you want to, sell your property, you've got no choice. You're going to sell, and those prices are definitely under pressure. Not everywhere, though. I mean, some parts of Auckland had, quite hefty gains, like 19%, 15%, and so on, 10%. These are still pretty good hikes. But on the downside, we're still seeing like 31% drops. For example, Mount Albert, the price there dropped 31%. So that went from 1.12 million to an average price of 800,000. So if you're in that price range, there might be some bargains for you if you're looking.
Wow.
Yeah.
800,000. Okay, let's look now at a study by the fund manager Kiwi Wealth. Now, it's identified what they've called a lost generation who's missed out on a decade-long period of prosperity. I mean, who and what are we talking about
here? We're talking about young people primarily. So they did a survey of 2,000 adults, and they found that where the young people were concerned, more than half of them really are, they're just living paycheck to paycheck. And 2/3 of renters, same boat, as well as people in low-income families. They just can't see their way out of it. They just can't imagine that they'll ever have any chance at, say, owning a home. Certainly not these prices we just talked about. And they just feel like they've just missed out completely. The only savings that they have, potentially, if they're lucky and they can afford it through, say, their employer deducting at source, they might have a Kiwi Saver. But for the most part, they can't set any money aside for anything. And so the idea that they're going to own a home or something, it's not going to happen. And I spoke to one of the authors of the report at Kiwi Wealth, who produced the report that's not completed yet. It's going to come out next month. And he was saying, really, you need more than a Kiwi Saver. You're going to have to do something else to help these people save and to get out of the, really, it's a poverty trap, isn't it?
So I'm just curious, who did they consider this younger lost generation to be? What kind of age bracket?
Millennial.
So it was millennials.
Yeah, people who were born, that, the 20-ish life. Yeah, people that are starting out in life. And some of these people, of course, are also saddled with large student loans, too. So they've really been hit hard. And the idea of them ever being able to afford some of these even, reduced price homes, forget it.
And we say reduced in inverted commas,
interestingly, the people in the regions were were finding it more difficult than people living in Auckland, which I thought was quite surprising.
It's incredibly curious.
It is a bit curious. I think it may be that people in Auckland make more money than people in the regions. It wasn't clear from a limited amount of information that came out. That report, which might have more information as it comes out, would be next month,
Okay. So what about the market? How's it doing?
really interesting. So it's been a pretty quiet week, as you can imagine, with school holidays, the Easter weekend, and now we're going to have Anzac Day today, tomorrow. So the markets have been closed, and but not today. Things went crazy in the afternoon, and that's mostly because the Australian CPI was far lower than the market had been anticipating. It was right off. Now, I wrote that down somewhere on all these papers I have in front of me here. But yeah, it was much lower than anticipated, and as a result of that, the Australian dollar dropped quite substantially, and since I think it was the lowest since the beginning of March, and took the Kiwi with it. Of course, that often happens. And really, for the Reserve Bank of Australia, it's almost certain that they're going to cut interest rates when the Reserve Bank meets there on May 7th. Now, we meet the following day, our Reserve Bank. So we were already anticipating, some economists were anticipating a rate cut here. We're in a better position, really, than Australia, because their interest rate, their cash rate is currently 1.25%, 1.5%. Ours is 1.75%. So that would take the RBA down to 1.25. If that happens, we'll see even, probably even more reaction. So the CPI was a big surprise. It rose just 0.2% on the quarter, 1.4%. For the year, and that is well short of even the most pessimistic outlook that economists had priced into the market. So, of course, we saw a big drop.
I was going to say dollars. Where
absolutely. So we went to 66.3 US cents, but still holding strong against the Australian, not surprising, 94.1 cents, and against the pence at 51.2, which isn't too bad. But for the Australian, it went down to 70.36 against the Australian. Against the American. Yeah, and that's just what I was looking at just recently. But it went down as far as 70.31, which is pretty low. That hasn't been seen since, again, early March. So yeah, but on the flip side, well, the markets, the share market, right through the roof, because of course now interest rates are right off the table, so big boost to the other side of the market, right?
Interesting day in business. Thanks, Nona.
Oh wait, don't you want me to tell you what the numbers were? The NZX Top 50 Index, it rose 0.2% to another record, 10,072.
So over the 10 again,
at 67 points. And so, there's a lot to be said about that too. Some analysts are saying that's quite pricey. And at this point, anything's possible. Probably people will start taking profits when you look at the value of some of our companies.
Thanks, Nona. Nona Palcio with your business wrap.